Welcome to today's deep dive. You see these massive online trading communities or like packed local seminars, and it's so easy to assume the person running it is just making millions trading their own capital.
Right. Yeah, it totally looks like a closed loop.
Exactly. But if you peek behind the curtain, you'll actually find this massive hidden revenue engine that has, well, absolutely nothing to do with executing their own trades.
It's the introducing broker model, or IBs.
Right. So our mission for you today is to decode how these financial influencers build serious trading revenue without actually building a brokerage.
It's honestly a fascinating hidden architecture
Yeah.
because, the whole model hinges on monetizing an audience without ever touching client funds.
Or managing the trading platforms themselves, right?
Exactly.
So to understand how they actually make money, we first have to draw a hard line between the IB and the broker.
Yeah, let's unpack that because the IB sits precisely where trader demand meets broker infrastructure.
I mean, the IB handles the client acquisition and relationships, right? While the broker does the heavy lifting, like the trading environment, deposits, back office stuff.
Yeah, exactly. They handle the execution.
So is this basically like being a highly specialized real estate agent? Like
Yeah.
you find the buyer, you pitch the neighborhood and hold their hand through the paperwork, but the broker actually builds and maintains the house.
That is a perfect way to look at it. And, by not building the house, the IB gains massive operational leverage.
Oh, right, because they don't need all that upfront cash.
Exactly. A solo marketer or a signal community doesn't need millions in capital or like massive compliance teams to get started. They can focus entirely on lead generation and trust.
Which makes it really tempting to think they just, I don't know, drop referral links on social media and collect passive cash while they sleep.
Right, the easy money stereotype.
Hmm.
But looking at how they actually get paid, it is anything but passive.
Right, because it's performance-based, isn't it?
Yeah, entirely. It's either a one-time cost per acquisition, so a CPA, or an ongoing revenue share that's tied to trading volume.
And there's a catch there, right? Especially with CPA payouts.
Oh, definitely. There's a vital nuance for long-term survival. Brokers often heavily scrutinize CPA traffic to hedge against, fraud or low-quality leads.
So revenue share is better.
Well, revenue share aligns the incentives of both the IB and the broker much better. But that recurring revenue only lasts if the client actually stays on the platform and keeps trading.
Wait, so here's where it gets really interesting to me. If an IB relies on that recurring revenue, they can't just set it and forget it.
No, not at all.
Because, like, if the broker's platform is glitchy or if funding is slow, the IB pays the ultimate price when the client inevitably leaves, right?
That is exactly the vulnerability that separates the amateurs from the professionals.
How so?
Well, the weakest IBs just blast out market opinions and links, but the most successful ones act like actual business developers.
Providing operational support and stuff.
Yeah, they provide support, they clarify account options, and they really guide people through the whole onboarding process.
Because for a beginner, I mean, confidence is the biggest friction point.
Exactly. And an IB who removes that friction builds serious loyalty.
But all that loyalty just goes up in smoke if the infrastructure fails.
Oh, 100%.
So if long-term retention is the IB's lifeblood, choosing the right broker is literally a make-or-break survival decision.
Yes, they can't just chase flashy headline commissions. They have to scrutinize execution quality and multiple platform options.
And they have to watch out for concentration risk, right? I mean, if 90% of an IB's revenue comes from a single traffic source or one specific trading strategy,
Right, what happens when an algorithm update tanks their views?
or low volatility makes that strategy obsolete, their cash flow just zeroes out overnight.
Exactly. Mitigating that risk requires a broker ecosystem with a really wide product market fit.
Right, so a smart IB needs an environment where a beginner can start with something simple, like copy trading maybe,
Yeah,
and then smoothly transition into advanced self-directed trading a year later, all without ever leaving that broker's roof.
spot on. When a user progresses inside one ecosystem like that, the IB benefits from continuous retention. The wider the broker's offerings, the easier it is for the IB to build a durable, diversified business that actually withstands market volatility.
So what does this all mean for you listening? The IB model isn't just some raw traffic game.
Not at all. It's an intricate dance of relationship building, audience fit, and selecting robust infrastructure.
Right, the common denominator is trust. I mean, human relationship building is the true engine keeping a successful IB business running,
Definitely.
which raises an incredible question for the future. If trust and, holding the client's hand through that financial neighborhood is the core value, how might the sudden rise of hyper-personalized AI-driven trading assistants disrupt who we trust to guide us into the markets?
That is a great question.
Yeah, like will the next great real estate agent for your trading account even be human? It's definitely a new idea for you to ponder.